Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Monday, October 26th. Hope you had a wonderful weekend. One of the issues we looked at on Friday was we wanted to see a commitment. We wanted to see that stronger close, especially in the indices and actually a whole variety of different markets. That was kind of the underlying theme. Well, it didn't happen. What we did see in the NASDAQ market, for example, was rejection. We saw a market again that got high enough to find sellers, as it has the last 4 times we've been up here. Look at little shadows every time we've been up there. Not a good sign for continuation. It would imply that we would back off, but I feel the same way about this as I did after this day. Remember, I said we should be very cautious when that occurred about being aggressive on the sell side, primarily because of the benchmark candle. We're staying above the midpoint, and we can see the next day give us a little push. That was Thursday. Well, I feel the same way about this coming Monday. That we're looking for, I think I'd be cautious on being aggressive on the sell side, and we're looking for the possibility of basically an unchanged type market. So I think from my perspective, even though this is bearish and it does imply unchanged to lower, I think we need to be guarded in that respect. Now let's take a look at these currencies in terms of Friday's commitment. And what we saw was a little bit of a market backing off. You see that in the euro, the Swissy, which means the dollar strengthened a little bit going into Friday. Again, I would be very cautious about being super bullish the dollar. I just don't see the pieces in place to cause that type of movement. And one of the markets that did back off, you can see a lot of these smaller ranges that we're looking at here, except for our friend Mr. Yen. That came off quite a bit. And you can see in the Asia session we're firming up some. We are looking for further weakness, though, in that market. And the British pound, that was also one of the more active markets. And we had a buy point down here. This would have been a sell point here. The difference between those two in terms of magnitude, economic value, would be $3,437.50. That's the dollar value if someone had purchased this and sold it at that level. Okay, that's what's going on with that. Now also I was asked about the advanced videos, and basically in the advanced videos we discuss what those price levels are, the price behaviors we look for, and it lasts from 10 to 20 minutes in terms of length, depending on the topics and what's going to be going on. Today it'll probably be close to over 20 minutes. Now, let's get back though and focus on this. So what are we looking for tomorrow? Or I should say today. What are we looking for? Well, can we find these buyers pick back up? Did they get out for the weekend and now they're going to return on starting on Monday morning in Asia? Well, this benchmark candle would imply that. It's a very similar setup that we have with the stock indices, and what we're looking for. Again, this was bearish on Friday, but what we're looking for is we're looking for buyers to return to this market. Now, short end of the curve in interest rates still kind of hanging right in there, has not been able to get above that 66. We did see further weakness in the notes and in the bonds. As I said, these were at critical levels, and I still feel that way. If these pop back up a bit today, and get back above these green lines especially, that direction, this could be very bullish for Tuesday's session. So today is going to be an important day, I think, in these markets. We're looking for a relatively quiet range. And when it comes to the metals markets, well, they're still struggling. Nothing really new here. It's behaving, like I said, like we've seen many times before. Once you start seeing that structure setting up like this, and in other words, shadows on the top and these shadows on the bottom, what we're ending up with there are these symmetrical triangles. And we could pop either way. It's 50-50 in terms of this type of action, but I still think the bias is to the upside. Now, well, except for the silver. Silver, we got a pretty big benchmark candle there. Now, in bearish. In copper, well, we're looking for a move to the upside. We're looking for that to continue. Actually, that'd be the positive sign we're seeing. Friday was a rest day, but it's not a bearish day. And today's action is going to set the tone for us. So I can't wait to see what happens with copper. And in the energy markets, well, crude oil did back off some. We saw that, what I call false sense of security on Friday. We would look for this to back off some. It did, or on Thursday, and on Friday it did back off some. But again, I think we need to be cautious about being super bearish crude oil, although fundamentally I don't think there's a reason for us to be up here. But I felt that way for a long time, and the fact is what you and I trade is price, not an opinion. Natural gas continues weak, and we're looking for continued weakness in that market. These levels are significant for that market, and we could possibly get a bounce today, but we are looking for weakness in that market. In the grains, again, these are weather-driven markets. It's 50-50 in terms of how they behave. We can see in Asia they're firming up here right now. I would like to go with that. In other words, you can see these sell points are a lot lower. And the reason is the type of market we have, so we want to give it some room. And today it's going to be important. If it's going to move, we want to see it test those shadows. Well, this concludes today's market studies. Hope you found a few ideas helpful. Looking forward to being with you again tomorrow, and in the meantime, take care.